Many of you have been asking me my opinion of Alibaba and JD. And yes, I'm going to compare side by side just for you, my subscribers. In this video, you will discover number 1, how both Alibaba and JD generate revenue for their shareholders. And number 2, which business, Alibaba or JD, will allow our money to grow much faster for us. And number 3, what is the one most important factor the business need to have in order for our investment to 10x? So let's talk about the business model of both companies so that you will understand whether Alibaba or JD is a better investment for you. Alibaba has 4 main revenue segments: core commerce, cloud computing, digital media, and innovation initiatives. However, 86% of its total revenue are generated from core commerce itself. For JD, almost all revenue generated are from core commerce activities. And most revenue generated by both businesses are from China itself. On the surface, both Alibaba and JD seems to have similar type of business, which is e-commerce, but the business model of both companies are so much different. For Alibaba, its mission statement is to make it easy to do business anywhere. Therefore, it launched its first marketplace, Alibaba.com, which is mainly business-to-business platform. In short, we call it B2B platform. Few years later, it launched Taobao Marketplace, which is consumer-to-consumer platform, similar to eBay in United States. And later, it launches Tmall Marketplace, which is business-to-consumer platform that allows luxury brands like Cartier, Prada, and Chanel to reach Chinese consumers at the comfort of their home. All 3 platforms that Alibaba launched are purely marketplace. Let me share with you how a marketplace works. It is like Alibaba Group set up a nice physical shopping mall for sellers to display their products in the mall itself with lots of customers. So in this case, the shopping mall acts as a middleman for both buyers and sellers to conduct transactions. And because Alibaba Group is the one that set up the shopping mall, it will receive commission on every single transactions between the buyers and the sellers. For JD, it focuses on good customer experience and efficiency on the delivery. And that is why JD is known for its same-day and next-day delivery services. It launched its direct sales platform whereby it deals with the customer directly from placing order all the way to delivery of product, because JD aims to provide the best customer experience. Therefore, it has its own warehouse to store its inventory, logistics, and many more. Although JD is mainly focusing on its direct sales platform, it has its own marketplace, which is mainly business to consumer platform. Therefore, you can see that Alibaba is an asset-light business and JD is an asset-heavy business. Alibaba Group is focusing on building marketplace. It has no inventory and no warehouses. It purely connects both buyers and sellers to make money from the sales commission and advertising. JD, on the other hand, is focusing on direct sales, whereby it controls the whole supply chain and sells directly to the consumers. It also has its own marketplace where it makes money from sales commission and advertising. Based on China's B2C online retail market, Alibaba Tmall have a market share of 63% and JD have a market share of 25%. From these statistics, we can know that both Alibaba and JD is the market leader in the e-commerce space in China. Next, let's look at the financials of both Alibaba and JD so you will know exactly which business has a higher potential to grow your investment in a faster pace. Based on total revenue, both Alibaba and JD is growing at an exponential rate. In my opinion, both pass my criteria. And based on net income, Alibaba has been growing steadily year after year. For JD itself, for last 2 years, it has been making profit, which is a good sign. So in this scenario, I will pass Alibaba and I will continue to observe JD. For Alibaba, the cash flow has been consistently positive, which is a good sign. For JD itself, the cash flow is not consistent. However, for the last 2 years, it has shown some improvement. Therefore, I will pass Alibaba for this. For revenue growth rate, both Alibaba and JD is growing at an exponential rate. However, in this case, Alibaba is growing much faster. Therefore, I will prefer Alibaba. For the margins, we have to take note that Alibaba margins has been declining steadily throughout the years. However, JD margins has been increasing slightly over the years. Therefore, For Alibaba itself, we have to take note of it. And in this case, I will pass JD. For net profit margin, Alibaba achieved a 29.28%, which is crazy good. For JD itself, its margin is around 6%. Therefore, based on net profit margin, I would prefer Alibaba. Do note that this is because Alibaba have less overhead compared to JD, which explains the wide difference in both companies' margin. And based on PE ratio, Alibaba is around 26 times and JD is around 15 times only, which based on valuation, JD is much cheaper compared to Alibaba right now. Hold on! Before you rush to buy Alibaba or JD, do research on the management of the company as well. Management of a company can literally lead the business to the moon and also crush the business in 1 second. A good management is one of the most important factors for us to 10x our investment. I still remember 2 years ago, I made a mistake because I overlooked about the management of a business. I invested in this company called Wirecard as the business is doing really well and the financials are fantastic. However, due to the mismanagement of funds, such a wonderful business like Wirecard collapsed overnight and I learned my mistake right after that. And this caused me to lose about 5% of my total portfolio. One thing I always look for is the CEO's skin in the game, which is the ownership percentage. Based on ownership of Alibaba CEO Daniel Zhang, I can't find any data on it. Therefore, I assume it has less than 1% ownership of Alibaba. However, for Richard Liu, which is the CEO of JD.com, it has an ownership of more than 15%. So this is a good sign that Richard Liu has lots of skin in the game with JD shareholders. Therefore, this is a good sign for JD. And on a side note, Alibaba is backed by SoftBank, which is a Japanese multinational conglomerate. On the other hand, JD is backed by Tencent and Walmart. Do note that I do have Alibaba shares in my portfolio right now, and I do not have any JD shares as of now. So, what do you think? Is Alibaba or JD a better investment for you? Or do you think both are good investment as well? Do comment down below to share with me your choice so that we can discuss further in the comment section below. Gently click on the like button so that this video will push to more people in YouTube to profit safely in the stock market just like you and I. Do watch this video right now to find out whether Alibaba or Amazon is a better investment for you. I will see you there.